Hey, what's up guys? Madaz is finally back with another video. I know it's been a long time, but as we've seen, summer trading has been kicking in full force, and unfortunately that usually means very slow action, and very slow action usually means that's very tough for me to find examples to make a video. But today, thankfully, the stock gods finally gave us an opportunity, threw us a bone, gave us some pretty nice action today. Made out with some pretty decent gains finally, and I'm very happy about that. And more importantly, very happy to finally get an opportunity to make another video. And this video is going to be part 3 in my Trade Ideas Scanners series, and this is basically going to be about how to build a watch list, or more specifically how I build my watch list. Of course, everyone has different styles, different preferences, but I get a lot of people probably wondering, when I post my watch list in the morning, why does he include this stock? Why does he exclude this other stock? What's he thinking when he's choosing so-and-so stock? So this video serves to hopefully answer all of those questions for you guys, in case next time you guys see me post something in the morning, you guys understand my thought process and why I go with stock ABC instead of stock XYZ. So if you guys haven't checked out part 1 of my Trade Ideas Scanner series video on YouTube, feel free to check that out. There should be a link somewhere on this video or in the description. Part 1 was about my gap scanner and how to set that up. It's very easy, very simple, some very basic settings that you can also tweak on your own to your own liking. And part 2, which you can also check out via a link in this video and also in the description, is basically about my momentum scanner and finding plays on the fly, stocks that pop out of the blue, out of left field during the actual trading day, and how you can pick those up before they actually move. I'm actually going to use both my gap scanner and my momentum scanner in this video, so it'll be in your best interest to kind of get a good understanding of what they actually do, what their purpose is, so you can actually get the full understanding of this video. So again, this video is basically about how I build my watch list, so let's go ahead and start that. So today we're going to go ahead and take a look. This is my gap scanner, and this is what it looked like at 9:25 a.m. Eastern time. So basically what I'm looking at is I'm looking at the top gappers by percentage change from the previous close. As you can see right there, I have this this column selected and sorted from top to bottom, greatest change from the close to lowest. And one of the first things that I'm looking at is I'm looking at how big basically did it change from the close. Pretty self-explanatory. You want stocks that gap big, you want stocks that make a big move. That way they have the volatility, and usually they have the room, the range to, give us a nice intraday range today. So SGOC, SGOC, whatever you want to go, whatever you want to call it, SGOC was the leading stock today in terms of change from the close. It was up 36% 5 minutes prior to the open. So as a result, you can see it made my list today, and this is actually my list on Twitter that I tweeted. You can kind of see my watches: LPCN, SGOC, and SPEX. So you can kind of see SGOC 36% change from the close. Made my watch list. LPCN was a stock from the previous day, Monday, yesterday, and it's also gapped up 29.1%. ENPH gapping 12.8%. That did not make my list. I'll explain it in a second. And the last stock to make my list was SPEX. It was up 19.2%. So the next step that I'm going to look at is the float. Now this is very important because we all know that low float stocks tend to be more volatile and tend to give us more range just because of the nature of the way they trade. So ideally I'm looking for stocks with float below 5 million maybe. That's pretty good. That usually gives us a nice volatile price action at the open. At least that's when there's a lot of volume. Good chance for the stock to move a lot. Below 5 million is pretty ideal. When you're looking at a float that's below 1 million, that could be a stock that's trading very thin, so you gotta be really careful with your size, as the stock can get really volatile. But at 5 million, that's a pretty good area to be around. So we're looking at SGOC, 10 million shares outstanding, 4.59 million float. LPCN 17.1 million float. That's a little high. However, under 20 million is pretty doable. Starting from the 30 million and on range, that's venturing into the mid float tier. I would say 30, 40, 50 million, that's getting kind of thick. So usually I would prioritize those a little bit less. But however, I wouldn't completely rule them out, obviously, because they still have the potential to move given the volume. Okay, SPEX, SPEX, 4.06 million float, 4.94 million shares outstanding. So very nice stocks right there, fitting the criteria. LPCN a little on the high side, but still doable. Made a pretty nice move after hours yesterday, and so second leading gapper today, giving it a chance. ENPH. Now, there's a reason why I didn't add ENPH to my watch list. Number one, it's a sub $1 stock. I usually don't trade sub $1 stocks because of you don't get ECN rebates when the stock is below $1. So usually, if you have to take liquidity, you're gonna get dinged with ECN fees. And if you add liquidity, you get no ECN rebates. So that's one reason why I don't trade them. That doesn't mean I would rule them out, because if there's a really nice volatile sub $1 stock with great price action, I don't mind trading it if there's an opportunity. However, I have to take into consideration that I won't be getting any rebates, so my fees will be higher when trading these. So it has to be a very high risk reward setup, or I won't bother with it. Now, another reason why ENPH was not included in my watch list, again, the float, 62 million float. That's a little bit on the heavy side for me. I'm not a big fan of that, so that's another reason why I did not go with ENPH. Now, one stock that I did fail to mention, and I do admit it was a mistake, I did trade with a different computer because I was traveling yesterday. It wasn't at home, so I traded with my laptop, so I didn't get a chance to move over all of my charts. I missed DCTH. DCTH was a stock that was in play yesterday. You can kind of see that it did go from 7 cents and it ran all the way to 10 cents, and today it was a nice low runner. So another thing that I want to look at in terms of what stocks to add on my watch list, I do pay attention to the stocks from the previous day to see if they're still in play for a continuation move on the long side, or possibly maybe even a pop for a reject for a short on the day too. So DCTH definitely should have made the list. I just missed this one just because I didn't trade with the same computer and I just forgot about it. But DCTH definitely would have made the list. Another stock that might have made the list, or at least on the peripheral secondary list, you would say, ZN was a stock that was in play yesterday. Obviously, it was the squeezer. You can kind of see it go from the low 2s up to almost 4. Today, it gives low volume, but did give us a nice little panic candle right here with decent volume. We nailed the short right here against that little resistance from power hour yesterday. You would have gotten a nice fade. So ZN was one that could have made the list as well. CIE was also a stock that kind of did that little pop and spike and then the drop, a little pump and dump there action. Today, very low volume, but I would have kept an eye on it anyways. And I did keep an eye on these stocks. It was on my second screen. But definitely, that's another criteria that I would use to develop my watch list, to find out what stocks would make the watch list. The prior days stocks, to see if they're still in play. At least keep them on the corner of your eye there. Just don't lose sight of them, just in case something crazy happens. Usually, sometimes they might give us a nice little quick pop that you can short, maybe with some small size, make a couple extra bucks here and there. So the previous day, that's why I usually tweet out. I always talk about staying until the close, even if I'm not making any trades. Most likely I'm not making any trades, but I'm still watching the action to see if any stocks survive, quote unquote, to see if there's any sort of continuation. Maybe it gaps above the previous day's highs, maybe it runs after hours and it ends up being a nice washout long play on day 2, or maybe it ends up being a panic pop reject short. So you need to definitely keep an eye on those. And of course, LPCN was the stock yesterday that ran like crazy after hours. So definitely this would make the watch list. Any stock that makes a move from $4 to almost $6 after hours deserves to be on the watch list. And today it was, as you can see, it still maintained a 29.1% gap. So either way, it would have made the watch list by virtue of being a runner from after hours the previous day, or by being a gapper today. So as you can see, my watch list today would have been SGOC, LPCN, SPX, and of course also DCTH. DCTH. And out of the corner of my eye, also keeping an eye on ZN and CIE. Now, another thing that I want to look at, a very interesting metric that I want to look at on this gap scanner, as you can see, institution owned. This is something that I like to mention often. You guys see me tweet about this all the time. Some of you guys are still confused about it. I do have a video about it. Check it out. There's probably going to be a link in the description on this video where I discuss the importance of understanding institutional ownership in a stock. This number usually sometimes can be approximate. It's very difficult sometimes to determine it exactly. So, you know, it's good to know, but just because the stock sometimes has a high institutional ownership, if it still matches the criteria, you may still be able to trade it, but just be aware of the institutional ownership. So usually when a stock has a high institutional ownership, I would say starting from 40 to 50% or above, that's when it starts getting a little bit sketchy. That's when the action starts to become a little bit manipulated. It feels manipulated. It starts feeling very grindy. And that's the kind of action that you don't want to get stuck in. So as a result, when I see a stock have a very high institutional ownership, I tend to be very wary about it in terms of trading it. So just keep that in mind. Again, you shouldn't rule that out completely, but it's just something that's good to know in the back of your mind. Now, LPCN, you can see that it had 49.2% institutional ownership. However, it did gap up 29%, and the float is, you know, fairly small. It's not too small, but it's fairly small. So that still made it a good candidate to trade today. Now, a bad combination would be a stock that has a high float and a high institutional ownership. For example, VSLR, 100 mil float is pretty high, and also 96.9% institutional ownership. Again, this number is approximate, but when you see this kind of combination, a high float and a high institutional ownership, it usually is a bad sign, because those stocks usually need a lot of volume to sustain a large move. And also with a high institutional ownership, you can kind of see that usually the action is not very favorable. We can actually take a look at the chart on VSLR, and you can see exactly that. It kind of just traded like a very thick stock, almost like Siri or Zynga. You know, very popular big board stocks that are very, very thick. You can kind of see the charts are fairly similar. You know, this kind of blocky, you know, chart that's similar. It reminds me of those good old 000 stocks on the OTCs. But you can kind of see VSLR kind of chopped around all day. The range was fairly good, I guess you can say. But this kind of stock, I wouldn't like trading it. You get like random pops and then just a very, very heavy, thick, choppy looking chart. So I'm not a big fan of trading these. Of course, you guys can trade them. More power to you if you can. I'm just not a big fan of them. So that's for that reason, VSLR, it wouldn't make my list. So overall, basically, I'm looking at a couple things. So you want to look at the gap, okay, the change, percentage change from the close. You want to look at stocks that are gapping up, ideally at least double digits, hopefully over 20%, that would be very nice. But stocks that are gapping up over at least 10% usually gives us at least an opportunity for a volatile price action at the open. You want to look at the float. Okay, ideally you want to look for a float maybe around 5 million, maybe a little bit less. 10 million is still pretty good. Even 20 million is still not that bad, but starting from 30 million, 40 million, 50 million, you're getting a little bit thicker price action, and it's a lot harder to trade. Now, DCTH is a little bit of an exception. I do want to mention this. DCTH, I believe, has a 100 million float, but you got to understand that the float is tied to the market cap, and DCTH is a very cheap stock. Okay, so you can kind of see according to FinViz, 167 million float. DCTH, you know, today opened around 10 cents, so 100 million float. That's like the same thing as a $1 stock with a 10 million float. So you can kind of treat it like that. Market cap, more or less, is actually the real metric that you want to look at with regards to the float. But, you know, we're usually used to trading stocks that are over $1. DCTH is a little bit of an exception. Crazy runner that's ran from like 1 cent, and so it's ran up to 30 cents now. So basically treat it like a stock that's you know, $3 or like $1 at the open today, 100 million float, and that's ran to $3. Basically kind of the same thing. So DCTH, a little bit of an exception. large float, but relative to the price and as a result the market cap, it's still pretty much the same as a $1 stock with a 10 million float, which would meet our criteria. So, and lastly, the last thing you want to look at, of course, institutional ownership. You just want to be able to avoid those grindy, manipulative stocks, just because, you know, being stuck in them is not fun, at least from my experience. Again, if you guys can trade those, more power to you, but just not my thing. Now, the last thing I want to go over is, obviously, once you develop your watch list, you know, you want to figure out what stock you want to trade at the open. You're obviously not going to be able to trade 3-4 stocks at the open unless you're like an octopus with 8 arms or something like that. You probably won't be able to do that. Or actually, it's probably better to focus on nailing one stock than to try to nail 4 and then screwing up on a couple of them and then ruining your day, right? So for me personally, I like to focus on the best plays. Today I ended up trading LPCN at the open because it was the easiest read. Made a nice move at the open. You can kind of see that this thing dropped like 50 cents and then it dropped another 20-30 cents or something like that. Eventually bottomed out, so it dropped almost $1 in the span of 15 minutes or so. You can also see that on the scanner, momentum scanner, which is very helpful feature here in Trade Ideas. You can kind of see that it spammed out SGOC around the 934 mark. So, you know, SGOC was a stock that you could nicely trade here after this panic spike. It opened with low volume, but once you can kind of see that spiked here. Got this 400,000 share candle, spiked to a high of 230 from a low of 145. It made a pretty nice short there against that 245, 250-ish level as a risk level, as that was a resistance from the daily. So you can kind of see that it did eventually fade back to 170 for a nice short. I did trade that with a very small size just because it was a tick pilot stock. Made some small money off of it, no problems. But my main focus today was LPCN because it was the most volatile, traded with the most volume at the open. So at the open, what you want to look at is you want to look at which stock has the most volume. So in this case, it was LPCN with the most volume at the open, 750,000 rather. DCTH did have 50 million at the open, but it was a 10-cent stock. So in terms of dollar volume, I think that's more or less, let's see, let's do the math here. That's $1.5 million on DCTH on the first candle and $3.75 million in volume on LPCN. So LPCN had more dollar volume, more money being thrown at it, so LPCN was a more liquid stock in terms of dollar volume. SGOC became a liquid stock after it hit scanners, and I guess people chased the top here and then became a fade as long as probably got trapped there chasing the top. And then you can kind of see other stocks came into play, SPX, a little bit of a delayed pop there, low volume, I ended up not trading it. And then of course ZN, like I said, the stock that you wanted to keep in the corner of your eye just in case something moves, right? ZN gave us a nice little pop, delayed pop here around 9:45. Pretty much after all the other plays were milked out, people probably moved on, tried to chase the ZN. ZN had SSR on or something, I believe. It gave us this nice little pop here for the fade. So using the momentum scanner and the gap scanner, very, very helpful. You can kind of see which stocks are in play at which times. You can kind of see that over time you get different tickers spit out at you on the momentum scanner, and you can kind of know when to move on from one stock to the next. So let's see if there's anything else I need to talk about. Oh, so when you see a stock on your gap scanner, in this case SGOC, LPCN, or SPEX, you also obviously want to look at the daily chart and how the stock has performed in the past, what it tends to do. SGOC obviously was a stock that was hanging around all-time lows or close to all-time lows or whatever just a couple days ago. So when you see a chart that's been downtrending like this, it usually tends to be a better short. Obviously not always the case, but you know, it's good to take a look at what it's tended to do in the past. You can kind of see on May the 8th, it gave back its gains on a nice high volume day. Today, same thing, high volume day, gave back its gains. SPX, you can kind of see as well, another stock hovering around basically the lows. And you can kind of see a lot of these large wicks on these high volume days kind of suggests that this thing tends to close off of its highs. So you want to make these kind of observations, you know, look up each stock, do the technical analysis on each stock that you see on your gap scan, and then combine with the information that I mentioned to you, the float, the share structure, market cap by relation, the gap, obviously the change from the close, institutional ownership. Combine that with observing which stock has the most volume at the open, most dollar volume. So you want to go with the most liquid stock, and also of course combine that with the momentum scanner to see which stocks are in play, so that way you're in the hot stock at the right time. So that being said, guys, hope you guys found this helpful. A lot of guys have been asking me about my watch list, how I choose my stocks. Hopefully this answers your questions, and thanks a lot for watching, guys. Once again, if you haven't checked out Trade Ideas, definitely check out the link in the description. Use my code, promo code Madaz15 for 15% off. Check out the link in the description. Definitely a great tool to have in your arsenal. I've been using them for almost 2 years now. I can say that they've been very, very helpful and instrumental in my trading. So that being said, guys, check it out. Hope you enjoyed this video. See you guys next time.